What's up, everyone, and welcome. Today, we're tackling a massive bottleneck that almost every developing trader hits at some point, and that is your trading journal. Now, let's be real for a second. Spreadsheets can absolutely work when you're just starting out. They're free, they're highly customizable, and if you're only taking, one or two trades a week, manually typing in a few rows, not a big deal. But here is the hard truth. Once you start taking more trades, tracking different setups, or managing multiple accounts, those spreadsheets quickly transform from a helpful little tool into a messy, slow, and honestly frustrating chore. As your trade volume scales, your tracking needs to scale right there with it.
So think about your current routine. Are spreadsheets actively holding your trading back? Because we have all been there. Picture this, it's the end of a brutal red trading day. You're stressed out, you're exhausted, and literally the absolute last thing you want to do is spend 20 minutes manually typing rows of data into a rigid Excel grid, trying to remember exactly why you entered that one losing trade 2 hours ago. I completely empathize with that pain. Your trading diary should be a system that helps you review your performance clearly and effortlessly, not something that creates a bunch of tedious admin work after every single session.
Let's look at the difference here. On one side, you have your traditional manual spreadsheet. Basically, it's just a flat list of numbers. On the other side, you have a modern trading diary. And a modern diary is not just a place to tally up your wins and losses. It's specifically built to help you track your entire process. Your emotions, your setups, and your mistakes. The ultimate goal is to understand exactly why your trades worked, why they failed, and what you need to tweak for tomorrow. And the best part? A modern diary does all of this without making you build endless, complicated manual formulas.
Problem 1. Too manual. Let's break down exactly why the old way fails. For active traders, manual entry simply takes way too much time. If logging a trade takes more than 30 seconds, human nature kicks in, doesn't it? We just start skipping details. You might log the entry and the exit, sure, but you skip how you were feeling. Then you have a bad week and you just skip logging entirely. And once trades are missing and your data is incomplete, the entire diary becomes completely useless. Check out this specific number, 60 to 90. The data consistently shows that traders using spreadsheets typically abandon their journaling habit entirely within 60 to 90 days. Why is that? Because the friction simply kills the habit. Think about it. On a standard account, logging 5 trades a day manually can eat up 5 to 7 hours a month. That is hours you could have spent actually reviewing your setups and improving your edge, instead of doing basic data entry. Moving right along to problem 2, hidden patterns. Spreadsheets might be okay at showing your basic profit and loss, but they completely hide the behavioral patterns that are secretly draining your account. For example, a spreadsheet won't easily tell you if you're consistently losing on one specific breakout setup, or if you overtrade right after your first loss. Visually, a pattern like this explodes off the screen. A trader who absolutely crushes it on Wednesdays, making, say, 38 grand, but then constantly gives it all back by taking 76 losing trades on Thursdays. A spreadsheet is never going to tap you on the shoulder and say, "Hey man, you need to stop revenge trading on Thursdays." A better trading diary makes these toxic behavioral loops incredibly obvious. Which brings us to problem 3, missing visual context. Trading is a highly visual profession, right? Flat numbers in a spreadsheet cell simply cannot explain what actually happened on the chart. The crucial takeaway here is that numbers don't show price action. An entry price of $144 and an exit at $142 doesn't tell the whole story. Did you panic sell into a wick? Did you buy right into a major resistance level? A strong diary needs to let you visually review the exact timing of your entry and exit on the actual chart. You literally need to see if your execution matched your plan or if you just got shaken out by totally normal market volatility. So, if spreadsheets are creating all these bottlenecks, what's the solution? Let's talk about what you should actually be tracking to elevate your game.
Now, obviously, you still need to track the basics: entry, exit, symbol, stop loss, and your profit or loss. But the real magic happens when you start tracking the improvement data. You need to log the specific setup you used, the emotion you are feeling, the mistakes you made, and your risk-to-reward ratio. Tagging a trade with fear or FOMO before you even see the outcome, that is where real behavioral breakthroughs happen. When you can filter your data and see clear as day that trades taken out of FOMO have a terrible 20% win rate, well, that's going to change your behavior way faster than any spreadsheet formula ever could.
It's time to upgrade your toolkit. If you want to totally remove the friction of journaling and start uncovering these hidden insights, you need a dedicated platform. And that is exactly where the TradeZella solution comes in.
Let's look at the powerhouse features.
The biggest game changer by far? Connecting directly to over 500 brokers. This completely 100% eliminates the headache of manual data entry. Every single trade lands in your journal the moment you finish trading. On top of that, TradeZella offers unlimited backtesting to validate your strategies, setup tracking, dedicated prop firm sync to manage multiple funded accounts all in one dashboard, and structured playbooks.
But here's where it gets truly next level: Zella AI. This isn't just some basic chatbot. It actually acts as your personal AI trading partner. Zella AI automatically tags your trades based on rules you set. It reviews your daily sessions and actually spots those hidden behavioral patterns, like breaking your sizing rules after 2 p.m., that you would have totally missed doing a manual review. It literally does the heavy lifting so you can just focus on trading.
And hey, remember our problem with missing visual context earlier? Well, this is the fix. As the platform says, Trade Replay lets you go back and actually watch your trades play out candle by candle, tick by tick. This is a massive advantage. Static charts make every single exit look so obvious in hindsight, but tick-by-tick Trade Replay restores that uncertainty you felt in the moment, allowing you to rewatch your exact executions and figure out if that panic exit was an emotional mistake or a rational decision based on the tape. Let's contrast this one more time: stagnant spreadsheets versus structured playbooks. In TradeZella, playbooks act as your trading blueprint. You don't just blindly log a trade, you assign it to a specific playbook, like an open range breakout. You define your exact entry and exit rules, your market conditions, and then TradeZella tracks how often you actually follow those rules. You get hard, objective data on which specific setups earn their keep and which ones are just dragging you down.
So, what's the final verdict here? Stop slowing down your improvement. Spreadsheets are certainly better than tracking absolutely nothing, but eventually, their limitations are going to become a massive bottleneck to your growth as a trader.
I want to give you a clear, actionable path forward right now. Step 1. Ditch the manual entry. Step 2. Automate your tracking by syncing your broker. Step 3. Review what actually matters. Seriously, stop wasting hours building clunky formulas on a Sunday afternoon and start spending that time actually reviewing your executions, your psychology, and your playbooks.
If you are ready to stop limiting your potential and finally build a professional, complete review process, you can take action right now. You can grab a massive 20% off your TradeZella subscription today. Just use the promo code WOR20 at checkout to lock in that 20% discount. Upgrade your toolkit, ditch those outdated spreadsheets, and let your data actually work for you. So I'll leave you with this. Are you going to spend another 90 days trapped in spreadsheet purgatory, or are you finally ready to see the hidden patterns in your trading edge?